Steel reported largely an in-line set of Q4 numbers. The EBITDA was in line with expectation, though the India business was a bit subdued. Nigel caught up with Jayant Acharya, joint MD CEO of JSW Steel, to discuss the quarter and the way forward.
Quarter on quarter, quarter 3 to quarter 4, the coking coal prices went up by $22. If you recall, we had guided that it would go up between $20 to $25, and that's where it is. Coking coal prices during the quarter have eased, and as we speak now, it's in the range of $240 FOB Australia. We see the benefits of this coking coal cost coming into Q1 and partly to Q2. We expect about a fall of $22 to $27 in quarter 1 on account of coking coal. As far as steel prices are concerned, the prices got corrected because weaker global environment, higher imports into the country, especially from China. That impacted the sentiment, and there was some destocking prior to the elections. So we saw a slightly weaker sentiment in the domestic market. However, we got an export opportunity on restocking demand, which came up, and therefore we are able to evacuate steel. And as a result, our volume therefore went up, and we were able to post a good growth in sales. We liquidated inventories of about 300,000 tons in the last quarter.
Okay, all right. Mr. Acharya, just going by what you're saying, around a $27 per ton relief on the coking coal front, and steel prices as well will be higher. Could you quantify how much higher are they as of now?
Difficult to put a number to it, Nigel, but what I can say is that in the month of April and May, the prices of both flats and longs have gone up, reflecting international price change as well. We see that the prices would remain stable because even after this increase, we are where we were 6 months back. And therefore, we feel in quarter last gone by, the prices have bottomed out. And the upward correction in steel prices is only leading to where we were a few months back. So we feel stability in prices, costs going down, and better volumes as we ramp up our capacities with additional capacities from Vijayanagar and the phase 2 of PPSL.
All right. So just doing a back of an envelope calculation, the EBITDA per ton for the coming quarter should be at least around 2,500 to 3,000 rupees better than what we saw as of the past quarter. Things are dynamic and can change, but at current reckoning, this should be the ballpark number?
Yeah, so the way I think we can look at it is that if you look at the 9 months gone by in the last year, the first 9 months up to December, our EBITDA numbers were between 12 to 12,500 rupees a ton. And I think we will be returning to normative EBITDAs in this year as well. The EBITDA per ton of 9,100 in quarter 4, which we saw because of the situation we discussed, was a one-off, and I think these will correct back as we go into the year.
You're referring to the consolidated EBITDA per ton, I'm guessing, at around 9,100 rupees per ton.
Yeah, but the Indian operations EBITDA is also very similar, 9,100 rupees per ton.
Okay, all right. Okay, all right. Out of the total volume guidance that you've given, how much will exports constitute?
Exports, as we have been saying, 12 to 15% is something on a year as a whole, which we would endeavor to look at. And depending on the market situation, we will move in that range. And you would see that in the last year as well, we were in that range. 14% for the year as a whole was our export share, export percentage of the total sales.
Gone ahead and renewed that enabling resolution to raise some money via equity. Is it just an enabling resolution, or will you look at raising equity in the near future?
It's an enabling resolution which we take every year,
yes,
in the beginning of the year, and that's the way we have done it this time as well.
Yeah, I'm just wondering because markets are so hot and the street loves the ferrous stocks. So it's a good time maybe to raise some equity if need be, but we'll wait for that announcement. You've done a small acquisition as well in Mozambique, and the rationale you've given is it'll support your coal requirement in the near future. So tell us, by when do we see coking coal coming out of there? And if you could give us a rough number, FY26, 27, 28, how do you see this ramp up? And what could be the potential savings?
Yeah. So, hard coking coal we have been discussing is an quality we have been scouting for in the past as well. We have looked at various assets, and now the one in Mozambique is a pre-development mine where the reserves, JORC reserves, are in excess of 800 million tons. We have been able to sign the share purchase agreement for this asset. Subject to the approvals, which is normal preconditions for such an asset, we will be able to get this closed in this financial year and move ahead. We would expect, since the asset is quite large, we would be able to take a large portion of our total hard coking coal requirement from this asset. It's a premium hard coking coal and a very good coking coal to blend with any other coal which we may have, which are weaker coals. In addition to that, our journey because the capacities are expanding, and as we had mentioned earlier, that we would focus on the local coal as well. So we are in the process of operationalizing the mines which we have won over the last 1 or 2 years. So 3 mines in our fold right now.
Yeah.
We expect to get about 2 million tons of clean coking coal from there once we are able to start the operations.
Okay, the country is gripped with election fever as of now. But post the elections, do you all expect any kind of movement on NMDC Steel, which is an asset that many have, have said that they're interested in the asset? Have you heard anything, and do you expect things to start moving post the elections?
I think post-elections, maybe we'll see some movement. But I think what is important is that the government is continuing, the government would continue to look at the initiatives which has been taken in the past, like infrastructure development, manufacturing, including divestments which have been looked at. We see the consumption story in India improving. The confidence levels have changed quite a bit. That's a big positive. We are positive on the growth momentum in India. IMF also in the recent April print have upgraded India's overall situation, and they have increased the growth going into the decade. So we are very positive about the India story, and we are aligning ourselves to be able to meet the demand which it will throw up.
Interesting chat over there. That's JSW Steel for you. Still steady for the markets, 50 points.